Good weekend, all. Ira Epstein of Linn & Associates with your weekly edition of your metal market wrap-up. And this is for Friday. I haven't done one of these in a while. August 27th, 2021. So, the elephant in the room, well, the elephant left. At 9 o'clock this morning, that's Chicago time, Fed Chair Powell spoke to the Jackson Hole Symposium. Everybody that I can imagine wanted to see the speech saw it. And basically, here's what he did. The Fed agreed that tapering of the quantitative easing that they've been doing, buying of treasuries, mortgage-backed securities, that will begin this year. They're going to start tapering back. What he also made very clear, he's still looking at COVID. That could delay as to when it's going to be. He didn't give you a time frame yet. He didn't give us an amount. What he did say is the Fed is in absolutely no hurry to begin raising interest rates, and tapering is not linked to raising interest rates. That's all you had to hear. The market looks at this as a very dovish, not hawkish, speech. And the market took off in the stock market. What did it say for inflation? Run, baby, run. The gold market, the silver market, the copper market, all the metals take off because the Fed just said, if you're looking at dollar strength off higher interest rates, wrong time. If you're looking for us to curtail the moves on inflation, not yet. I think that's a pretty strong statement. You then came out of here with all of the energies to the upside. The notes, the bonds, they did the same type of thing. They rallied. So an interesting day, and one of the elephants left the room. Now, there's another one coming at you next week, and that's the all-important jobs data. Is it that important now? No. Why? Whether it's good or bad, we know they're going to begin the tapering this year. That's all that it matters. Is it this report that'll set it off? Is it the September Fed meeting? It's a fait accompli. It's going to happen, but interest rates don't follow that at this point in time. And then he gave his talk about transitory, what isn't, what is. We'll hear more about this. This was the absolute Goldilocks scenario. So when you look at gold on a monthly chart, what did the market do? Well, the market last month had just been sitting here at the 18-week average. This month, you've broken hard. The month's not over. You have a few days, and you've come right back, and you're back over the 18-month moving average. So the bias is up. Remember what I said, when markets fall back, they often like to go to the key average, which be it a monthly chart, daily chart, weekly. I look at the 18-period average. So this is the 18-month, and that's what this market is fighting off of. The pattern is bearish. The momentum has been down, but the market's stuck at the 18-month moving average of closes. On the weekly area chart of just closes, you pulled back rather smartly. So if we come back, remember, I haven't been doing these for a while. This was last week, August 20th. This was the week before and the week before. So here we are. You'd spent a good part of the month to the downside, and what did you just do? Now you pop back up, and you're sitting here. That average is 1815.80. You're at 1860.60. So right back to that number. When you take a look at the weekly chart, you had stuck your head down, and this was, as you know, this was all off the August jobs data report. It started to break. You had that monster break that you followed through as the Asian markets reopened right after that Friday. And then the market started, just like on the daily charts, climbing back into resistance areas. When we take a look at the chart pattern, it is still bearish on the swing line. You have lower highs, lower lows. You have to take out 1832.60 to break that pattern, and that would not turn it bullish. If it went straight up there, you'd have a lower low and a higher high. When we put on that 18-week average, you see that that's what you climbed from after first getting to the 100-week moving average of closes and the Bollinger Band bottom. Now, if you were a subscriber on my regular futures and you saw the weeklies that I was doing during the pattern that I wasn't putting these out for you on YouTube, this is exactly what I was telling my traders. I was telling them, watch out. You don't want to be short under a Bollinger Band. You've hit a downside target, and at the same time, you had gotten yourself into what? Take a look, oversold territory. So the market's recovered, but it has not thrown out on the weekly chart new buy signals. When you look at the gold-silver ratio, still, silver is weaker than gold. You have to take this number on a weekly basis and get it back under that 69.88 to say it's different. When you come to the silver chart, here too, bearish, lower, it's been up here from there. Lower highs, lower lows. Then right here is when you first hit, that's it right there, that lower Bollinger Band. You've been going sideways. The question is, was it a downside breakout? You came down and you couldn't really do anything and you came right back up. So you spent 2 weeks under, couldn't get under the 100-day average, and you've snapped at this point back in. Oversold condition, in a downtrend, resistance back at the 2604 level. You have to take out currently 2609 to break the downtrend. So you have the ability here to rally almost from where you're at now, about $3, and still stay overall bearish. In the copper market, on a weekly basis, you came down a week ago, hit the lower Bollinger Band. I was telling people I think that was it. You've basically gone from the upper band to the lower band, and I was expecting to find support. Went on Bloomberg TV in Canada and other places saying that one of my favorite look-sees is copper. Well, for the week, it is up 18 cents, so I feel good about it. Has it thrown out on the weekly chart a buy signal? It has not. When you look at the platinum market, still bearish. Lower highs, lower lows, but down to that all-important 100-day average pattern. And look at how that market has paid attention to it. You also hit, again, lower Bollinger Bands with it, and you're getting a bounce. A sign the market is ready to turn back to the upside in a contra-trend move that breaks this whole leg down is to take out last week's high of 2028. As for the market staying bearish, well, what did you do with the slow stochastics? Let's look at them. Week 1 of embedding, not here. It's the first time right here, and this week was the week of August 6th. Both numbers are under 20. Both numbers under 20. Both under 20 through the 20th. So you have your embedded reading. If you rally, I would expect to see pros selling that rally until the red line closes over 20. What's been breaking the market? Well, we don't have the semiconductors, so there's not the demand for platinum and palladium. Why? You're not building as many cars. The lots have about 1/3 of them that they normally have at this time of the year. In the dollar index, well, is the market embedded? Let's take a look. Both numbers are not over 80. They get over 80 for the first time August 20th. They're still there at the end of this week. If we have a strong week this week, they'll embed. The odds of embedding are not typical. They typically on weekly charts don't do it. So I'm looking for further weakness in the dollar to not embed. We'll see if I'm right or wrong as everything comes together. That's just my news as I put everything there for you. You know, as I said, this is your free version of what I do on YouTube, but my specific versions are what my paid subscribers, $7.95 to join, that's what they get. So 5 days a week, in the morning, they're getting a 20-minute video, fresh, probably published by 6:30 a.m. Central Time. And then on the weekend, typically on Saturday, I'll do this video for them. Not this one, but their subscriber video. Even if I don't do these, I do those for them. Why? They're paying me. So I cover as many markets as you can imagine in the futures arena. It can be the stock indices, the currency markets, the interest rates, throwing the chart patterns at you. It's over 40 charts covered. And when I do it, let's assume you're on our website looking at it. When you pull a scroll bar, it lights up. I'm in the grain area. I'm in the energies. I want to go back to the metals. You don't have to watch the whole video. Go to the areas that you might want. You can even look at this, of course, with our free phone application where you get quotes, charts, everything you can imagine. $7.95 the first 30 days. And while it's $15 a month after that for each 30 days, you can get it down to $13 by buying a 1-year subscription. Just go to 866-973-2077 to call us, or you can go to the website and under the word research, Go there, everything is explained for you. I'm Ira Epstein. Good to see you. As the winter months come, I'll be doing more of these. You have a good day.